Hello and welcome to the Business Channel. In today's programme, as we emerge from the recent economic crisis, one sector that's experiencing significant growth in Britain is manufacturing. So we're devoting a whole show to that sector. Now, some argue this is just down to the weaker pound. So to kick off with, I put that question to Terry Schooler from the EEF.
Manufacturing is on the up because of a combination of both the competitive pound and I think the ability of manufacturing leaders to take advantage of the recovery. The competitive pound has undoubtedly helped since the latter part of 2008. But British manufacturing leaders have demonstrated the resilience. They've kept labour force and skills during that recession, and through the process of innovation, they've demonstrated that they can take advantage of these recovering and emerging export markets.
Now, which sort of manufacturer is doing particularly well? Which of your members is driving the revival?
I'm pleased to report that all sectors across manufacturing are performing well. There's the possibility of a downside here in terms of construction. Construction came out of the recession slower than the other parts of the sectors, and of course it's patchy. But other than that, this is across the board. Difficult to highlight any particular part of the sector, but if I was to, I'd probably quote mechanical, heavy investment, mechanical engineering, perhaps linked of course to those growing, emerging and export markets.
How attractive do you think manufacturing is as an activity in its own right? Isn't it better to find a high value idea and then let someone else make it?
I think there are two issues there in terms of describing the attractiveness of manufacturing. I think one is we have to recognise that over the last couple of decades, manufacturing has not had a particularly attractive or good image, and I think it would be wrong of us not to recognise that. But I believe that is changing, and I believe it's changing quite strongly as a result, in part from that recession. I think the other point you make is of course linked to where manufacturing should take place. Manufacturing is a great wealth generator. About 53% of our exports come from manufacturing, about 70% of our research and development in business comes from manufacturing, and of course it's a double positive whammy when we export what we've got here. And I think there is a clear link, whether or not we wish to face up to it or not, there is a clear link that where research and development is undertaken, in the main, that tends to be where the manufacturing or production takes place.
I mean, it can't be denied, though, that labour costs are so much cheaper in other countries, like in the Far East. And how can we compete on manufacturing if we're having to pay so much more for labour?
You're absolutely right. Labour costs, of course, are cheaper in the Far East and indeed in other parts of the world. But cost is only one aspect of competitiveness. Quality is clearly a big driver. Aftermarket or customer support, as we call it, and of course continuity of supply are also very important issues.
Do you see Britain as being just a location for small-scale specialists, or do you see large-scale manufacturing happening?
No, I don't see us just as being a place for SMEs, as we call it. We have a very strong SME market. I think it's fair to say that over the last 2 or 3 decades, we have seen a large number of British manufacturing assets being bought up, and therefore we do have an issue, and it would be wrong not to state it, that we do have an issue therefore that we do not have as many larger companies, say above 250 or 500 employees, as some of our other competitor nations. But as I mentioned a moment ago, we have a very strong SME base, and one of our challenges here in the UK is to grow that base and make those companies substantially bigger and stronger.
Well, Terry Schooler, thanks very much for joining us.
Thank you.
For Britain to maintain a competitive advantage as a manufacturing country requires assurances that rights to intellectual property will be protected, as our reporter Jane Bennett-Powell discovered.
Patents, design, copyright, they're the lifeblood of manufacturing business. And at the heart of the sector is Marks & Clark, an intellectual property services company. Simon Mountaineer is a partner. What is IP in a nutshell, and how does it relate to manufacturers?
Well, intellectual property, if you like, it's the output of your research and development. It's the output of your creativity. It's the assets that you can't touch. So it's the concepts and it's the ideas. It's all the stuff that really underpins the products that you're producing. You have various kinds of IP. The most famous one, I suppose, and in some ways the strongest one, is patent protection, and that protects the functionality of what it is you're producing, the way something works, the technical advantages that it offers. But you also have trademarks, which are the brands. They're the identity, if you like, not only of the products you're producing, but also of your company. And then you have designs. You can register a design, and that relates very much to the appearance of an article.
What are the risks for manufacturers who aren't IP protected?
Well, the risks are that as soon as they go to market, as soon as they put the product, if you like, in the public domain, it's there for everyone to see, and if they like the look of the idea, they can just go along and make something very similar.
How important is IP protection to a young business starting up?
Well, it can be important in a number of ways. The important thing to remember is that with a younger company, a start-up company, they very often don't have the resources and the infrastructure and, if you like, the financial power to compete with a lot of bigger, more established companies. If they don't have IP protection, they can put something out in the marketplace and the bigger players can come along and look at it and say, well, I like the idea of that. And it's very, very easy sometimes for them to get into the market and actually just sort of swamp the smaller company and really just sort of like blow them out of the water. If they have IP protection, it actually gives them something that they can fight back with because their position is protected. Another way that it can be very important is that a lot of the time with smaller companies, they are seeking investment for various stages in the development of the company. And as an investor, what you're doing is you're looking obviously for as much security as you can hope for in your investment. And if you know that the IP is protected, you know that if you put your money in, there's a much lower chance that someone else is going to come along really and sort of encroach on the territory. And also with suppliers, distributors, retailers, sometimes, not always, they want exclusivity. It can give them a much stronger position in the marketplace. And they can only really expect to get that if the product is protected, because a competing product could come along and could be sold more cheaply, and that could actually undermine their position as well.
What sort of costs are involved, and is it a worthwhile investment?
Well, typically to get a patent for an invention in a single country would generally cost an average of about £5,000, maybe a little bit more, occasionally a little bit less. It depends very much upon the nature of the invention. Very sophisticated, technologically complicated inventions can actually cost quite a lot more, but I would say, you know, £5,000 to £6,000 is an average. Might sound like a fair amount of money, but that's spread over a period of, you know, 2, 3 or 4 years. And if you compare it with other things that you might be spending your money on, I suppose it compares very much with a sort of half-page advert in a trade magazine or something like that.
Simon Mountanet of Marks & Clark, thank you very much indeed.
As well as IP protection, maintaining high manufacturing standards is also critical to Britain's ability to achieve global leadership in this sector. I spoke to UKAS about how this is done. Joining me now is Paul Stennett, the Chief Executive of UKAS, the United Kingdom Accreditation Service. Could you give us an overview, first of all, of your organisation and what it does?
Yes, UKAS is a private company, but we've been tasked by the government to accredit a number of areas, be it laboratories, be it inspection organisations and certification bodies, so that those companies that are checking both products, services, quality systems, you can actually rely on what they're doing. UKAS itself works in the public interest and is established as a so-called not-for-profit or non-distributing company.
Now, accreditation, is it becoming more important at the moment to British manufacturing and British industry?
Yes, it is. We're seeing ever-increasing demand for our services. One area is because of the, I suppose, the complexity of supply chains these days and global supply chains. If you're sourcing products from abroad or even supplying them elsewhere, people are looking to see that you can rely on the traceability, the provenance of the products, and they have been manufactured correctly. Therefore, if you have an accredited certificate that can accompany that product through the supply chain, that enables a purchaser to actually do due diligence to show that you can trust the product, you have confidence in what's being delivered, and again, it's been examined and tested by competent organisations along the way.
Now, how does the accreditation process work? Do clients tend to come to you and say, I think I need something accrediting, or do you come to them and saying, are you testing this properly?
No, generally people will always come to us to say that we feel there's a need for accreditation here, and actually that's one of the ways in which we work with customers. We will, even if someone comes along and says we require accreditation, and actually increasingly these days it's a government body saying that we require that rather than setting up a new government regulator. But ultimately we will look to see that there is consensus amongst all the stakeholders in the industry. So we're not accrediting just from the perspective of a particular supplier or a purchaser or someone manufacturing along that chain. We want to have consensus within the organisation of what is required in the accreditation.
Now, a lot of manufacturers in the UK are increasingly trading internationally. How can you help them in this area?
Well, UCAS is part of an informal network of some 70 accreditation bodies around the world. What that practically means for British industry is that if you have a product or service that's accredited in the UK, that will be recognised by one of these other accreditation bodies. When we look at those accreditation bodies, they actually are all of the world's major economies, and in fact they add up to something like 95% of global GDP. So it's unlikely that British industry will be exporting to companies to areas not already covered by accreditation. However, the main point is if it's been tested and checked in the UK by a UCAS accredited laboratory or certification body, then it will be accepted in those overseas markets. So our view, it's tested once, accepted everywhere, and that for manufacturers is going to reduce the cost of constant retesting every time the product is shipped into a different market, quite often in different stages of production. It's going to speed the supply chain and also cut down costs.
Paul Stennett, thank you very much.
Thank you.
Health and safety is also high on the manufacturing agenda, and it's essential that safety equipment is produced to a high standard. This is a key example of British firms preferring local products produced by accredited suppliers. Jane met up with Mark Johnston from JSP to find out more.
Have you seen a revival in UK manufacturing?
Definitely, we've seen a trend towards more of a regionalisation again of manufacturing. Various factors are driving that. China isn't perhaps as cheap as it used to be to produce in. You're competing more as well against increased local demand, and that is also causing lead times to go out quite considerably. Also, adopting lean principles of manufacturing enables you to be much closer to your customer and give better customer service. We've adopted that philosophy ourselves and invested quite a lot in UK production equipment recently, and we're able to bespoke products right up to the last minute for our customers.
There's a lot of equipment on the market. How do you choose?
What I would say to companies is to choose a safety product from a well-known branded manufacturer, and preferably, of course, a British manufacturer. That gives not only comfort in terms of having a product which will consistently meet and exceed EN standards, but also it gives the end user the opportunity to have technical support in the field and receive advice as well from the PPE manufacturer and the distributor.
For a new startup, how important is health and safety?
Health and safety is important for any company. It's part of the mindset of doing business. Studies show that companies that have strong policies and adopted as part of their processes are generally more efficient and better businesses.
What are some of the implications if health and safety regulations aren't followed?
Well, nowadays there are some severe penalties that can be incurred on businesses. In 2007 we saw the Corporate Manslaughter Act come into place. Any company has to abide by the 1974 Health and Safety at Work Act, and then there are other regulations involved as well, such as COSH regulations, which is control of substances harmful to health.
What advice would you give a new startup company that's having to embrace the health and safety culture?
I'd say don't be afraid to ask for advice. A lot of people, I think, take it on as a burden to themselves. Health and safety should not be an administrative burden. It should be very much integrated into the way one runs one's business. There are plenty of people out there who can help, a lot of health and safety advisors, professionally qualified advisors too, and also manufacturers of PPE products are able to impart advice for particular types of hazards and carry out site surveys to be able to help someone identify hazards and perhaps for them to be able to carry out risk assessments.
Health and safety has acquired a very bad, jokey reputation. From your point of view, how would you say health and safety needs to be considered?
Health and safety is something which good companies adopt at a board level. If you look at some of our leading companies in the UK, you'll see on their websites that health and safety is up there as part of their main mission, and objectives are set in order to reduce hazards and also to reduce accidents. Companies, for example, like Balfour Beatty have made a big statement, target zero by 2012, and that is literally to have no accidents by 2012. And we've been working very closely with them. It's a policy which is coming from the top to the bottom. It's a mindset, it's a philosophy being adopted throughout the company. And companies such as Balfour Beatty, I would say, are great examples from which one can perhaps adopt some ideas.
Mark Johnston of JSP, thank you very much.
Thank you.
In recognition of manufacturing's contribution to the economy, the government has taken steps to set the stage for this sector's growth.
I think the government has a very important role in encouraging manufacturing by being a good and effective partner. That doesn't mean trying to run the businesses, it means creating the right long-term environment. So a simpler tax system that reduces the corporation tax rate, so money can be reinvested back into industry and into capital. Making sure that in skills terms we're actually improving and increasing the number of apprenticeships so that industry gets the skilled workforce it needs. It means investing in infrastructure so that actually the UK is an efficient place in which to do business. That's why we're retaining the spending levels for infrastructure that we've inherited from the last government. And it's why we're investing in high-speed rail to make sure that we get that improvement in public transport. So I think the crucial point from government role is to be an effective partner, always wanting to look at how we can improve the conditions of manufacturing here in the UK, because I'm always mindful that we are competing with countries abroad. So we've always got to make sure the UK is a good place in which to do business. I mean, I know talking to businesses that they do find that accessing finance is a problem. We should remember that 2/3 of the smallest businesses get the money they seek in terms of loans or in terms of overdrafts, and in fact nearly 85% of medium-sized firms also get the money that they're actually seeking. So it is a problem, but it's not quite one that affects every business. But what are we doing about it? Well, first of all, we've asked the banks, and they've now brought forward a lending code and an appeals process so that if a business has a problem, they've got a means by challenging the bank if they think they've been dealt with unfairly. Secondly, we've also made sure that we are helping in terms of the enterprise finance guarantee, so government is underwriting loans made by the banks, and we think this will unlock about £2 billion in loans over the next 4 years. Then on the equity side, just as important if you're growing your business, we're investing 200 million in what we call the enterprise capital funds, and these are targeted at the high-growing, capital-intensive businesses, sometimes in industry, other times, for example, particularly in the low-carbon field. So it's that rounded approach, I think, as well as new initiatives on things like supply chain finance, that we think will actually free up the market and give businesses much more choice.
Lenders are also trying to create an economic environment that supports the manufacturing sector. And one bank that has seen increased demand from manufacturers is Aldermore, as I found out when I spoke to Group Managing Director Ian Wilkins.
Yeah. As Group Managing Director for Aldermore, I look after the bank's SME lending businesses. So we lend money to a large number of SME businesses throughout the UK, and I'm responsible for ensuring that we continue to develop our abilities in that area.
Now, the UK economy is increasingly relying on manufacturing as a sector, and how are you helping that sector?
A large part of our client base operates in the UK manufacturing sector, and it's really pleasing to see that a lot of those businesses are doing incredibly well in the current economic climate. We provide finance in a variety of different ways to UK manufacturers. We provide invoice finance, which assists with the cash flow. We provide asset finance to assist with the purchase of capital equipment, and we also offer commercial mortgages, which helps businesses looking to invest in properties to trade from.
Now, what kinds of financial products do you supply, and how do these help businesses looking to grow?
We provide funding that helps businesses in a variety of different ways. If we take a typical manufacturing business, then they will have a range of financial requirements. Most businesses will continue to invest in new plant and equipment for use in the manufacturing process, and through asset finance we're able to finance that, providing a product that gives them the ability to purchase that equipment with then fixed monthly repayments over an agreed term. Invoice finance provides working capital finance to the business by taking the unpaid invoices, using those as security and paying the company against those unpaid invoices, typically within 24 hours of the invoice being raised. So it's a massive benefit to the businesses in terms of bringing that cash flow forward. And then finally, if a business trades from premises that they own, or they wish to move to new premises, through our commercial mortgage products we're able to assist them in terms of providing finance over periods of up to 25 years for the purchase of those premises. So a wide range of services tailored to UK manufacturers.
Now, going into new markets is crucial for UK manufacturers, and how do you use your expertise to help them with that?
One of the things that we do, which provides a huge amount of support to our customers, we recruit staff with knowledge in key industrial sectors. So for example, in asset finance we have specialist teams in the construction sector, in the materials handling sector. In invoice finance we have experts in the road haulage sector, in precision engineering, these types of areas. So we recruit people who can talk to our customers and to our customers' advisors about their own industry in a language they understand, rather than just talking in the terms of banking.
Now, if you were to ask for a change in UK government policy or an EU policy to help yourselves and your clients, what would you be going for?
I think there are two very clear areas, and these are much talked about. The first one is cutting red tape. When I speak to clients of Aldermore, it's very clear that they spend far too much time filling in forms and dealing with bureaucracy. The second area is about a more structured support mechanism from the government for SME businesses. If we look at just how important it is that the SME sector continues to grow, there's over 4 million businesses there supporting something like 50% of the workforce in this country. The actual support network for them that's backed by the government is, quite frankly, inadequate for their needs. So I think it's two areas. One, that support, and secondly, cutting red tape.
Well, Ian Wilkins, thank you very much.
Thank you.
As the manufacturing sector grows, it also needs to be able to evolve to keep in line with changing legislation. One example of this is the Bribery Act, introduced in the UK in 2010. This applies to any UK organisation, regardless of its location, as explained by Nick Burkill from Dorsey & Whitney to Jane Bennett Powell.
Dorsey & Whitney is a large business law firm, and we're joined by Nick Burkill, who's the London co-head of trial. What is the Bribery Act?
The Bribery Act is an act which consolidates a couple of acts which have been around for a long time that make bribing and being bribed criminal offences, and makes those offences easier to prosecute and bring home. It also introduces two new offences which are designed to change corporate culture, and finally it extends the reach of the UK courts to foreign companies, many of which would have otherwise been immune to UK prosecution.
How common is bribery in the manufacturing sector?
Well, the manufacturing sector has traditionally had an issue with corruption, but very much dependent on the geographical areas in which it's carrying on business, and that's really the main thing that's been the issue for it. So there are certainly parts of the world which are recognised as having a bigger corruption problem than others. And Transparency International, for example, identifies those on its website, and areas such as South America, parts of Africa and the Far East, Russia, the former Soviet states.
Why hasn't this act been introduced sooner, if it's been a problem for so long?
Until a couple of years ago, overseas corruption was not a priority for UK governments. And it was taking the position that the existing legislation was sufficient to deal with the problem. It came to the fore only because the OECD became more and more strident in its criticism of the UK, such that in the end the previous Labour government decided that it needed to introduce the Bribery Act. And it should be remembered that the Bribery Act became law with all-party consent right at the end of the Labour government.
What do businesses need to know about the Bribery Act?
There are some very simple things that the businesses need to know about the Bribery Act. The most simple one is that it continues to be a criminal offence to bribe and be bribed. And the new things, the two new offences introduced to change corporate culture. The first of those is the new strict liability offence for organisations where a bribe has been paid in connection with that organisation's business anywhere in the world. Under the Bribery Act, that organisation commits an offence. And the only defence that that organisation has is that it had adequate procedures designed to prevent bribery that are compliant with UK government guidelines. And the second new offence is one aimed at senior officers of companies where a bribe has been paid, and they commit a personal offence if they are found to have consented to or connived in the payment of that bribe.
Could it be damaging, though, to UK business?
Of course, in the short term, if UK business loses out on a contract because another company has won it by bribing, then that is some business that has been lost. But it should be remembered that a couple of things should be remembered on the other side. One is that the Bribery Act has specifically broadened the UK court's jurisdiction in order to enable the Serious Fraud Office to go after many of the companies in those circumstances that have won business from UK business by bribery. But secondly, there are great opportunities for UK business arising out of a new approach, an ethical approach to carrying out business.
Nick Burkill of Dorsey & Whitney, thank you very much.
Thank you, you're welcome.
Particularly in the light of the government's £81 billion austerity plan, the manufacturing sector is seen as key to economic growth in the UK. Good progress has been made, and we expect to see manufacturing develop more as we emerge from the global economic downturn. If you'd like to find out more about any of the organisations we featured on this programme, then check out our website, thebusinesschannel.tv. Bye-bye for now.